Hello and welcome to the MoneyMagpie Invest podcast. I'm Jasmine Birtles and today I'm joined by Joshua Raymond, who is the British Managing Director of XTB. Joshua, hello.
Hello, good morning. Thanks for having me.
Great to see you, Joshua. And I'm just wondering, could we just start by explaining what XTB is and what it does? Because you're a platform that offers access to all kinds of investments.
Yeah, so XTB is an investment platform, basically, right? So our brand proposition is where your money works. And the main motivation behind that is it doesn't matter what type of investor you are, whether you're an active investor, a passive investor, whether your investment horizons are short, medium, or long term. The concept is that we have an investment solution for you, whether that's trading stocks or ETFs with 0% commission, whether it's our investment plans product, whether it's stocks and shares, flexible ISA accounts. Like the idea is that we have something that will fit what you need, basically. So we're a one-stop shop for all of your investment needs, and that's our big proposition.
And I noticed that you have investment plans as well. So is that kind of replacing financial advisors kind of thing?
Not really, no. I mean, investment plans is it's our proprietary product. Basically, what it enables you to do is build your own customizable portfolio of ETFs. And then what that will happen, what the investment plans will then do is it will invest automatically at set periods that you define. So basically, it's the best kind of like passive investment product that you can use. It's all 0% commission as well if it's less than 100,000 invested per calendar month. You can reallocate it based on your risk appetite. So you can put 20% of your funds in tech stocks, for example, or a tech ETF, some in interest rates, some in bonds, for example. So it really does give you, we like to call it like the master of your own fate. So really you can properly control your investments over a longer period of time and invest passively, and therefore you don't have to think about it too much.
You're mentioning ETFs. I mean, it's a good idea to unpick what an ETF is in case anybody's confused. And so could you explain what an ETF is and what kind of ETFs you offer? Because as you say, it is quite a significant part of the site.
Yeah, I mean, we offer more than 1,300 ETFs currently. We're expanding that list every day because ETFs has probably been, I would say, in the last 5 years, one of the fastest growing investment products for the retail audience, certainly in Europe and the US. And the reasons are pretty clear. So it's an ETF is an exchange traded fund, so traded on exchange. It's like a diversified investment because what that fund will do, and it has complete transparency of what that fund is invested in. It's multiple stocks or different types of assets in a particular sector or multiple different sectors or multiple different regions. It's a really efficient way of getting exposure across a diversified exposure that is relatively safe or safer because you can obviously choose ETFs that have a higher risk weightings. There are some leveraged ETFs, for example, which we don't currently offer. And the main point behind it, of course, is that for if you're new to investing or if you want to invest stably at a relatively low risk but still get a decent amount of exposure and diversification, the ETFs is kind of like a very good and very popular investment product for you.
So you've mentioned 0% commission, which, music to my ears, music to anybody, any investor's ears, of course, go, oh, great, don't have to spend that. But then you think, so how do they make their money then? So how does XTB make its money?
So there are additional fees on top of that. So it's not just 0% commission. So it's 0% if you invest less than 100,000 euros or sterling per calendar month. After that, you're going to pay 0.2% commission. We also do charge FX fees of 0.5%. It's not a huge amount, but that can have an impact. That's if you're trading or investing in an asset that's not of your base currency. So if you've got sterling in your account, but you're trading US stocks, then you're going to pay a 0.5% conversion fee to convert your money into dollars first before you can actually invest in that stock. So there are other ways that we make money. We also offer short-term speculative products like CFDs, which is much higher risk. It's more complex. But we also make money from CFDs because we charge a spread. So the main point that we behind our proposition is we offer multiple different asset classes, multiple different investment solutions, and so as a whole, obviously the company makes a significant amount of revenue. We're publicly listed. We're listed on the Warsaw Stock Exchange, so we're fully transparent. Of course, if you want to look at our revenues, then you'll get that update every quarter too.
Oh, that's very useful. Yes. So we've talked about a few different things, and I'm going to come back to CFDs in a moment. But just to start off, I just wondered if we think about somebody who is thinking about starting their investment and they'd like to start with XTB because there's a good spread and all sorts of things to offer and it's nice and cheap. Where would you suggest people start if they're just starting to invest?
So I always say the same bits of advice to anyone who's a beginner. I always say the same two things. So first of all, invest in what you know, because it's very, very important. Like there's no point in you investing in Japanese stocks if you haven't got a clue what's going on into the Japanese economy or how those stocks are performing or the fundamental makeup of the companies that you're investing in. So for sure, invest in something that you know. And obviously, if you don't know too much, then start researching, learning. There must be something that kind of interests you first. Like tech stocks, obviously, has been like the biggest driver probably in the last 2 years in terms of where most clients are interested in. Yeah, it's hard to evade the media at the moment where they're not talking about Nvidia or Tesla or Nasdaq 100. So trade what you know, invest in what you know. The second advice I would always give clients is also to really understand what you're capable of as an investor. Whether you're an investor or a trader, I always say that if you're a trader, you'll tend to be more short-term focused, more speculative focused. If you're an investor, you'll talk more medium to longer term, right? So figure out, are you a trader or are you an investor? And then choose the right product that fits you. It sounds corny, but I have been in the industry for probably, I think almost 19 years or so. And I always say the same thing. It's like you trade yourself first and then you trade the market second. And what I mean by that is you have to understand what you're capable of. So when I first started trading when I was a bit younger, I was trying to trade on a daily basis, but in reality, my heart was going like, boop, 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 and I really couldn't handle it. I was terrible at it. So I quickly realized that actually, like, there are great traders out there who can trade. They can scalp, for example, which is very high risk, but they can trade over like a minute or an hour or even daily, and they're capable of doing that. I'm not. So instead, I trade swing trades and I could trade on a weekly basis, and that's more comfortable for me, but it's also what I'm capable of doing. And that's my long-winded way of saying, understand what you're capable of, and it will take time, and then kind of stick to those habits.
I think at MoneyMagpie, we're very much investors rather than traders. We're buy and hold, we're thinking the long term. So for somebody who's setting up on their investment journey, I mean, I think you're absolutely right. Know yourself, invest in what you know. Would you say that they're best starting off with the pension, their company pension, and then looking into ISAs and maybe stocks and shares ISAs, that kind of thing? Because I see you offer investment in indices, index trackers, I'm guessing, and as well as ETFs, that sort of thing.
Yeah, I mean, SIPs and ISAs obviously is the go-to because of the tax advantages, first and foremost. So absolutely. ISAs, we offer flexible stocks and shares ISA, where you can invest up to 20,000 per tax year. And obviously you keep what you make. It's tax-free on the profits that you make, on the dividends that you get. And we also pay 4.75% interest on your uninvested funds within that ISA too. So it's like the best of both worlds, really. So I would definitely choose products where your return on investment is it can be better, and obviously having a product that has significant tax advantages is a no-brainer. Yeah, that's the reason why in the UK I think there's something like I think more than 40 billion of assets per year in stocks and shares ISA. So it shows you how popular it is as a product. And then in terms of what you're going to invest in, ETFs is a really good place to start because again, it's fully transparent on the makeup of it. It's fairly well diversified. There's so many different things you can choose from that gives you exposure to different types of the market or different types of sectors in different countries that you wouldn't normally be able to get in a standard platform.
I'm interested that you offer investment in commodities because I'm a big fan of gold, money metals, oil, gas. There's a lot, I think, in commodities that we could be profiting from. But how are we able to invest in commodities through XTB? What format does it take?
Probably three ways. So investing in commodities, you can obviously invest in stocks that trade like miners that trade on certain commodities. Barrick Gold, for example. Yeah, so that gives you some level of exposure in the gold price or in different types of commodities or miners, for example. You can invest in ETFs that have exposure to commodities. That's pretty clear. And again, it's quite well diversified. And then if you want to speculate, then obviously we have CFDs where you can trade commodities as well. But again, it does come with the risk because it's leveraged. So CFDs means that your exposure in the market is more than your deposit. So therefore your return on investment is magnified. And that's all great if it goes for you. But again, it's the negative side. It can go against you as well. So there are three ways that if you want to invest or get exposure in commodities, that's how you can do it with XTB.
So if we just go over that again with CFDs, you borrow money to invest.
I mean, it's one way of looking at it, but basically a CFD is a contract for difference. It's a leveraged trade on a particular market where it's similar to like mortgages. Okay, so if you buy a house, you normally put the deposit on and then the mortgage buys you the rest, right? And then you pay finance on that mortgage every month. It's quite similar in terms of the makeup of it. So a CFD would basically give you a 10 to 1, 20 to 1, or 30 to 1 leverage exposure. You would pay an initial deposit, which is called your initial margin. And then the rest of it is obviously effectively borrowed, but you would pay a swap or an overnight financing cost to finance what you've effectively borrowed to give you that bigger exposure on the market. Typically, CFDs are not held, the positions are held for very long. They tend to be quite short, like an hour, a day, a week, probably at most. Because of the leverage involved, it means markets can move quite quickly for you or quite quickly against you.
Yes, that is quite a scary product. You really do have to have been an investor for some time and be used to trading, definitely. So, not for the faint-hearted, I would say. We know that a big investing rule is to spread your money, to diversify your portfolio, as they say in the city. Looking at the XTB landscape, how would you think that somebody should spread their money if they're quite young, they're sort of maybe they're in their 20s, they're thinking about, they're setting up their portfolio. Where should they put their money as opposed to somebody, say, in their 50s thinking maybe about retiring at some point? How should they spread their money?
To be brutally honest with you, I don't think a 20-year-old learning to invest versus a 50-year-old thinking about their pension, their what they end up doing should differ too much, to be honest with you. Again, it depends on what your investment goals are. A lot of people who are a bit younger, who are just learning to invest, they want to build up a fund, whether it's to pay for something in the medium term. So let's say it's a holiday, or it could be, I don't know, they're looking to save money to buy their first home, for example. It just means that their goals are a little bit more shorter term than, say, someone who's 50, 55, thinking more about their pension and thinking about giving them regular income in 10 years or 15 years. So really treat it in terms of what your investment goals are. In terms of like, I would start again, like regardless of what age you are, what's your investment goals? What product you can choose that gives you the best possible return, the cheapest possible costs, and the best tax advantages. So again, flexible stocks and shares, I said, will probably tick most of those kind of boxes. And then thinking about what you're going to invest in, how regular you're going to invest. I would say one thing with people who are starting to learn to invest, and I'll give you a good example. I do think consistency is really important. So we actually did some piece of research about 6 months or so ago. We took like 5 of the most popular ETFs based on volume. And what we did was we created three scenarios. So one scenario was that you invested in those 5 ETFs every single month at the low of the market. So that would be the best possible return. Okay. Then we did exactly the same, but instead of investing on the low of the month, we invested at the high of the month. So the worst possible time to invest in that ETF on a month over a 5-year period. And then we just did, forgetting all of the timing, just the first of every month. So about consistency and stability. And to my surprise, investing on the first of every month was much closer weighted to the best performance than the worst. So that gives me pretty good data to evidence that actually consistency is really important. Not picking the best time to invest, it's actually just being consistent and being confident, and investing over a longer period of time will typically give you a better return.
Interesting. So what they call pound cost averaging, just regularly, first of the month, last of the month, every week, every month, whatever, putting a certain amount of money in, maybe automating it, and that brings a good return.
We have a saying about saving money smartly. So this is a good way of saving money smart. That's why we consider our investment plans as a savings product, because instead of just saving money and putting it into a bank, let your money work for you, because your bank, most high street banks, are not giving you a good rate of interest on your typical current account. So let your money work for you in a safe way that does give you a return. And then over 1 year or 2 years, again, with the investment plan, you can project backwards over a 5 year period and see what the highs of that would have been, the lows would have been, and what the typical return would have been. If your money is making a good stable 5 or 10% for you every year in a low risk investment, for me, that's a smart way of saving money.
Yeah, definitely. I mean, you've mentioned, as you say, the banks are not giving us much at all. I mean, most of them aren't. Your ISA, as you say, gives us 4.75% just while it's sitting there with no risk at all. So I'm guessing that a number of people just put their money into one of your ISAs and don't even invest it. They just leave it at 4.75%, do they?
Yeah, I mean, again, our brand proposition is where your money works. So for us, it doesn't matter whether you're investing money, whether you're thinking about what your next investment is going to be. Like, the idea is, like, you should always be getting a return because your money's working for you, because it's with the XTB platform. And yeah, 4.75% interest on uninvested funds definitely goes along with that. I mean, let's be honest. Obviously, we don't want people just to sit with us and park their funds. Ultimately, we're not a bank, we're an investment platform. So we want people to come to us to invest safely at a very low cost across different asset classes. But whilst they're thinking what to trade, their money's still making a return for them. And that's the thing that's most important for us.
And speaking of making your money work for you, let's have a look at Forex, because I noticed that you offer Forex as another trading proposition. It's something that I've always kept away from, because I mean, we're talking about trading currencies. I think currencies are remarkably volatile, very tricky things to work out. What sort of a person gets into Forex and does well in Forex? How do you make money? How do you get there with Forex? Because clearly some do. I mean, George Soros for a start.
Yeah, who gets into Forex? Someone who is very confident and is willing to take on risks, I would say. But I mean, ultimately, what is Forex trading? So Forex trading is basically speculating on the movements of currency prices. So whether you think the pound is going to rise against the dollar, or the dollar is going to rise against the yen, then obviously you can trade on that belief, and then obviously make money as the dollar appreciates or depreciates against whatever currency pair you think. And obviously, currency pairs are volatile. For sure, especially the pound of late, because of the UK economy and what the government are planning on doing in terms of raising taxes, or pretend that they're not raising taxes. So so it's always something interesting kind of going on. Now, the one thing I would say with who is a good Forex trader, again, I think because Forex trading, number one, it's including leverage, and the market on the underlying market in itself is quite volatile. So really, it's about understanding what you can do as a trader, what sort of attributes you have, whether you do well in stressful situations or not, and then picking the strategy that's going to work for the type of person that you are. These are the people that do well. I know we've had clients over the years who've made hundreds of thousands trading Forex, and we've got clients who've lost significant amount of money trading Forex. Really, it's about choosing the right strategy that fits you, and then practicing and learning about your experiences.
And I'm guessing it's something where you really need to be up on world news, to have an idea what the currencies are going to do. You can't it's not just numbers on a page. You're talking policies, and I mean, as you mentioned, taxation, economic policies of various governments, etc.
Yeah, I mean, there are two. Well, I guess there are two significant things that move currencies, right? So obviously the economics of a particular country, and obviously with that you have macroeconomic data that comes out every week that is going to move the currency prices. So you've got inflation readings, whether you've got GDP readings, whether you've got employment data. All of these have a material effect or influence on the price of a particular currency, which gives it volatility. Right. And then the other thing, obviously, is going to be the movement of interest rates. So the movement of interest rates over the last 2 years has been quite significant. It's always in the news. And it's not just the movement of interest rates, it's the movement of interest rates against the market's perception of where they're going. So yeah, this is why currency trading, forex trading is very interesting. It's why a significant amount of people do it, because there's always something going on. There's always a potential opportunity to make money. But again, I come back because I need to have my compliance hat on every now and again. Is that it does come with the risks as well, and people need to understand the risks involved.
Very good point. So finally, can you explain sort of very briefly how you set up an account on XTB? Because for a new investor particularly, you look at these platforms, you think, oh, it does this, that. Where do I start? What do I do?
So we have a desktop platform and an investment app, and it's really easy to open an account with us, to be perfectly honest with you. It's free to open an account. There's no need to put any minimum funds in to get the account activated or anything like this. Simply go to xtb.com, click on create an account or download our app through the App Store and follow the steps, and your account could be up and running within a few minutes.
Oh, nice. Oh, well, that's nice and easy. Well, thank you so much, Joshua Raymond, Managing Director of the British wing of XTB. Thank you for showing us all of that. And do remember that nothing that we've said today should be taken as financial advice. If you'd like financial information, do go to moneymagpie.com. I've been Jasmine Birtles, the founder and editor of MoneyMagpie.com, and do share, like, follow, all the usual things with the Money Magpie Invest podcast. Tell all your friends, just generally gush about it because you know you want to.